Next, we'll move on to another industry trend, which is blockchain. So what is blockchain? Blockchain is a system of recording information in a way that makes it difficult or impossible to change, hack, or change the system. A distributed ledger or blockchain is a highly secured database. It securely stores and accurately records data, which has broad implications in accounting and financial records. Some advantages of blockchain include enabling smart contracts, protecting and transferring ownership of assets, and verifying people's identities and credentials. Once blockchain is widely adopted and approved more extensively by industries and governments, it can benefit businesses by reducing costs, increasing traceability, and enhancing security. Next, we'll talk about what is the impact of blockchain in accounting and finance. Firstly, it allows for easier reconciliation. The end-of-month chores may become less of a burden. Accountants can start using smart contracts to automate reconciliation tasks. We will create reduced auditing. Many accountants are excited about blockchain simply because it can lead to much less audits in the future. Auditors can automate most auditing functions through the power of smart contracts. Auditing can be fast and easy, thanks to its inherent traceability of everything that is recorded on the blockchain. And since everything is automated, blockchain can reduce the time an auditor needs to spend checking the books. This will also result in reduced costs. No matter the system, a reduction in errors and increase in efficiency results in reduced costs. When making the switch from conventional accounting systems to the blockchain, accounting firms can expect to see cost savings quite quickly. The initial adoption costs should be well worth it. Number 4, it can reduce errors. Data entry is perhaps the area where blockchain can definitely help the most. It's where chances of human error are also the highest. Blockchain can significantly reduce human error by making most accounting functions automatic. To add, accounting is currently based on a double entry bookkeeping system in which the accountant and independent auditor input and verify a company's financial information. With blockchain technology, there's no longer a need for this kind of redundancy, since the data can be verified without another party. It's a complete automated digital audit of each individual transaction. Blockchain can also be leveraged to improve traditional accountancy and fight accounting fraud. It's challenging to commit fraud using blockchain due to its immutable nature. Modifying a record on a blockchain is highly infeasible, as the actor will have to make the same change on all copies of the distributed ledger simultaneously. Blockchain can also improve efficiency by being designed to make it more efficient than legacy accounting software. It's more challenging to get data into and out of accounting software. It's definitely a lot easier using blockchain. And lastly, improve regulatory compliance. Agencies must go through a lot to satisfy regulatory demands. Blockchain can help take off the burdens, thanks to the enhanced security it offers. Blockchain may even become mandatory in some financial sectors as more regulatory authorities embrace this technology. So how do we get started if you are keen on blockchain? A few of our recommendations include Blockchain and Bitcoin Fundamentals, Blockchain Theory 101, Blockchain Understanding its Uses and Implications, Harness the Power of Blockchain and Cryptocurrencies, and lastly, Introduction to Enterprise Blockchain. For additional learning materials, you can tap on Blockchain and the Future of Accountancy, Blockchain in Accounting Research and Practice, Current Trends and Future Opportunities, How Blockchain Can Disrupt Banking, How Blockchain Innovation Could Affect the Audit Profession, a qualitative study, and lastly, Where Accounting Really Stands with Blockchain.